All right, you're looking at NVIDIA, the daily chart, and I'm not going to start with NVIDIA today. I'm just going to go through the leading stocks, and NVIDIA is one of them because the leading stocks will tell us how the indices are doing. So I'm going to go with a couple of stocks that I'm booting out of my leading stock list, and I'll get to my leading stocks. Palo Alto is out. It sliced its 50, pulled back to its 200 after the CEO said that there was fatigue in cybersecurity spending. I'm not sure what he's talking about. He walked it right back and said the demand is greater than ever. However, the damage was done. The algos turned the cell programs on, and it also had an effect on CrowdStrike and Zscaler. But this stock pulled back to, it lost essentially like 9 months of, gains here as it had broken out of a base and run higher. And now it's pulled back to me. I mean, if you liked it at, 360, you should love it at 260. And now it's hit the 200 and it's popped up about 20 points. So it's at 282. It closed there on Friday. I like the stock. I mean, if it's a weekly chart, so I got to go to the weeklies. And you can see the big drop here as the walls crumbling down, as John Mellencamp would sing, but it's a cash cow. And I mean, the cash flow, return on equity, no debt, stellar balance sheet. But I don't know what the CEO is doing there. He did say that the smaller players were, taking some of their vendors through lower pricing, and they're the biggest cybersecurity company. There's still 90 billion, and so everybody is a smaller company. So I don't know who he's talking about. If it's CrowdStrike, I don't know. We're going to find out as CrowdStrike reports here pretty soon. Zscaler reports this week as well. So anyway, that's enough of Palo Alto. Booking got the boot as well. This thing, I have to go to the daily charts here. It just sliced its 50 in volume. In a market environment like this, yes, a new bull market, I'll say it. You don't have to hold stocks that are slicing their 50s like that. They shouldn't be, right? I'm going to show you a ton of them that aren't. And this is Shopify, fell out after, I believe that was their earnings report, now below the 50s. So it's adios, muchachos. And I kicked out Giga Cloud. I don't know what happened with this thing, but when I own a stock that's, it has a 75% daily range, hello, 35 to 20, some fund might have been liquidating on a Tuesday, and it came down to its 50, and then it ramped back up the rest of the week. But it could go to 100. It's going without me. I've got to be on the T box and watch my stock down all that way. That's a little unsettling. Yeah, down 24% on the day. So anyway, yeah, that's the type of action that I'm just going to stay away from. It's a little, the one fund that probably was selling, maybe was buying back. Who knows why they're out, but that's just too wide for me. Just not my style. So, if you own it, and I don't see anything wrong with it. It's just not my style. So it's adios, muchachos, and on to the leaders that I do own and that I like and that I have at my site, starting with NVIDIA. You can see that it pulled back with the index pulled, but has been pulling back, pulled back to the 21, then gapped higher with, phenomenal earnings report. And you could see on the weekly here after the breakout of from the 505, that has the 8-week hold rule in effect. So it went up more than 20% in 3 weeks, up 8.5% last week, or $62. If I take a look at this on the daily chart, I'll go back to the daily. I'll be toggling back and forth here, but you can see we've never seen a company like this that with nearly 2 trillion market cap deliver triple-digit sales and earnings growth 3 quarters in a row. This is a real, you cannot deny this is a real strong AI revolution. This is a strong phenomenon, and NVIDIA is the king, the leader. This is the one that I want to own. We were fortunate to get it there at 505 on that January 8th day. I think it was a Monday when it was ramping up through its pivot point. So NVIDIA is just a beast of a stock. Yeah, I sold most of it before earnings because you saw what happened with Palo Alto. but then I bought it right back and a little more after, I saw that earnings report on, was it Wednesday afternoon? Yeah. Just phenomenal numbers from NVDA. You got to protect yourself on these earnings reports. As I just showed you with Palo Alto, you don't want to sit through something like that. So it's just like insurance. You sell it, and then if it's good, then you can buy it back at higher prices, just like the insurance companies are doing right now, raising their prices. Anyway, I'm going to move on to Super Micro. There's been a lot of talk about this stock. I'm going to go to the weekly first. This also has the 8-week hold rule because it went up, more than 20% from a proper buy point within 3 weeks. So anyway, it was up 7% last week. I know a lot of shorts or just a lot of people are talking about it's dead. It's going back to 300. Couple things, it's going up every week. So it was up 7% last week. Yes, as I zoom in, it did undercut the prior week's low, which is something it hadn't done in, a long time, like 8 weeks. So that's not ideal, but look at this cash flow and return on equity. These guys have the sales growth, and they could raise guidance at any time, the way they're doing business. But you see the triple-digit sales growth, the earnings growth. They've got the fundamentals, and it's still not an expensive stock. It's what do they say? They're going to do 15 billion in sales, and it's got a 48 billion market cap, so just slightly over 3 times sales. So but for me, if I want to own this stock, it's above the 21. It closed Friday 20% above its 21 EMA. So to me, it's still a viable stock. It's still healthy. It's still viable on dips. It's probably going to confound the shorts and the longs because that's what it does, and that's what it did through here, and that's what it's done ever since I followed this stock back in 2021. So don't expect it to be an easy trade. It's going to be wild. Obviously, it had this whatever you guys want to call it, a climax top, a blow off top, whatever people learn a new word and they want to be posting on Twitter all the time. But that is a top, but it might not be the top. It is a top, but not the top, perhaps. And I know some, renowned people are saying that this is a climax top and the whole sector's gone to hell, sell everything, but I don't agree with that at all. To me, we're just in the early innings, and this is a big player. Sure, there's going to be competition, but I think they're still going to do well. So anyway, that's enough for SMCI. I got to go to CrowdStrike. I believe there's 3 obvious themes right now that are investable. And the one is the AI stocks, which I just showed you 2 of them. Another is the weight loss drug stocks, which I'll get to, and then the cybersecurity stocks. And CrowdStrike to me is like an inflection point where Palo Alto goes down and CrowdStrike, when they report on March 5th, I think we're going to see they're not going to say the same things Palo Alto said, I don't believe. I think they're one of the smaller vendors. But you can see on this weekly chart that it just pulled back to its 10-week line and then found support and bounced last week. This is due to the Palo Alto, talking about fatigue and cybersecurity spending, which does not make sense to me. I think there's more spending than ever because you can't afford to be hacked. Government can't afford to be hacked. Local municipalities, we cannot be, the utilities companies can't afford to be hacked. Financial institutions, we all need protection, every single one of us. And CrowdStrike delivers their endpoint solutions. I believe they're going to report a monster quarter. They better, because it's an expensive stock. But it just pulled back to its 50, and that's the first trip to the 50 since this breakout from this like a long kind of a flat pattern here. Breakout and then just ramped higher, finally pulled back to its 50. CrowdStrike looks good to me. I mean, if you liked it at 330, you should have loved it here when it came down to 280 last week, and found support 273. Wow. So if you got that, congrats. Broadcom, AVGO, another one of our leading stocks. Yeah, it's extended. A lot of the stocks are extended that I'm showing and not near buy areas, and that's probably why the market's probably not going to just be ripping higher. And we'll probably get some more consolidation here in the last week of February, but Broadcom's extended, broke out of this ascending base pattern on the 19th. And it's extended from its 21 here, 4.8%. And, it's been pulling back. You can see it pulls back, and that gives you the opportunity, but I doubt if it's going to sit there and form a nice base for you. Zscaler, this is one of the ones that got caught up in the Palo Alto shenanigans. It sliced its 50 once again. Probably a good buying opportunity there. It recaptured its 50, but still closed below its 10 and its 21. They report earnings on the 29th. So that's something to look forward to this week. There you can see that action. Once again, I don't think they're going to say the same thing that Palo Alto has said. But anyway, it still looks good to me on the weekly, and I believe this old highs of 376 are a possibility. It takes those numbers out. Maybe not this year, but in the future. Meta platforms. No, wait a minute. I'm going to Meta platforms. I can go to Meta. What the heck? Another one that's flat base pattern, gapped up after earnings, pulled back to the 10 one time, forming a little shelf there. There you can see the 3 weeks tight, then last week was up 2%. Meta is just a strong stock, a total beast. Advanced Micro, another one of these AI plays. This looks like a little flat base pattern here. 14% from peak to trough, 5 weeks. This one looks good to me. That it's not extended. It had a little shakeout here last week, down to 161. So to me, this looks actionable. That's going to be on our ready list. I expect AMD to break out of this little 184.92 and move higher towards 200. So it's a race to 200 between what do we got? ELF and AMD. I believe those two are battling it out. Spot, this is one of my surfer stocks. This one is just broke out and then just riding the 10 higher. I think it ramped on earnings and just going higher. So that's one of my Kelly Slater stocks. And then this is Laird Hamilton, which is Abercrombie and Fitch. Those two are just surfing their moving averages, and they're extended. And there's nothing to do really. They report March 6th, so that's coming up. I mean, there's nothing to do. If you own it, congratulations. I think we put it on our leading stock list when it was like 55 back here. I don't know, 55, and then it's been more than a double. So Abercrombie and Fitch doing nothing wrong. Arista Networks, they reported earnings and pulled back, almost pulled back to the 50 there. The problem I have with this one is the decelerating sales growth, which I do not like. The EPS growth is phenomenal, though. I mean, anything above 40 here, that's really nice, and they're going to earn 850 next year. I don't know. This is for me, there you see the pullback to the 10-week line, which is not the same as the 50-day. People get that confused. 50-day and 10-week, you'd think it'd be the same, but it's not. And I don't know, Arista Networks doing nothing wrong. I would like to see the sales growth, pick up in the next couple of quarters, though. But definitely a strong stock, definitely an AI play. Okay, I've done enough cybersecurity and AI plays. I got to get to the drugs. This is Novo Nordisk. They just bought Catalent to increase their manufacturing. They cannot meet the demand. Their supply does not meet the demand. But once again, they have accelerating sales growth, and that's what I like. That's going to turn into phenomenal earnings down the road. And like I said, they bought this manufacturing plant, which will increase manufacturing in 2026 in Belgium, Italy, and in North Carolina. So this is a longer term play. They're looking for the long term out, 2030, when their manufacturing gets cranking, ramped up. They're also going to seek approval. They are seeking approval for kidney and cardiovascular diseases. Cardiovascular disease, the number one killer globally. And if they can get approved for that, then that will open their drugs up to Medicare. It has a market cap of 550 billion. It's no small fry. But definitely a strong stock and one that I think, is you could put in your retirement fund. Another one, Eli Lilly, broke out, getting support at its moving averages. This is another one in the, the weight loss category. Just finding support after the breakout, finding support at its 10 EMA. Once again, nice cash flow and return on equity, and they even pay a little dividend. NVO and Eli Lilly pay small dividends, but that's not why I like the stocks. All right, back to AI. That's enough drugs. ServiceNow broke out of a base here and then pulled back to its 50 for the first time last week. That's usually a gift, and this time it pulled back as the indexes had a little shakeout. It pulled back to 730, closed Friday at 770. ServiceNow is just a monster. Jensen Huang on his conference call, I believe, mentioned there's several software names, and he mentioned Oracle and ServiceNow and a couple other ones, Dropbox and Box. So as gold mines, he says these are gold mines that people are undervaluing or underestimating as the AI revolution is going to ramp up here in the next couple of years. So ServiceNow is definitely one to own. You can see the cash flow and the return on equity, and this is a cash cow. All right, let's go to another AI play. Really, with software, I really don't know exactly what all these companies do. And I don't think I need to. I just, kind of follow the charts, and that'll tell me, which ones to own and which ones not to own. This is elastic though, and you can see this gapped out of this like stage one base and then formed a little flat base pattern. Now it's 3 weeks tight as it heads into earnings. Elastic has earnings on, oh, don't start doing this to me, Market Smith. God. They have earnings this week, I believe. Yeah, Elastic. Anyway, 3 weeks tight, reports earnings on February 29th. All right, I'm going to move on to Datadog, hopefully. The dog, if I toggle back and forth, Market Smith might not be cooperating today. On Datadog, I have to go to the weekly chart because this is a huge consolidation. The longer the base, the higher in space. And you could see that it broke out and then pulled back to its 10-week line following its earnings report. Right there. Yeah, it pulled back and then ramped up and then now pulled back again. So it's kind of just finding support at the 50, which is okay. It's got consistent, 25, 26% sales growth. Last quarter, they reported triple-digit earnings growth. So I think in the future, it looks like Datadog, could attack those old highs. That would not surprise me at all. Once it really breaks out from this base, it has not even really broken out yet. So maybe next quarter. ELF, another one that's not, we finally found a stock that's not in drugs or AI or cybersecurity. This is in cosmetics, and this is kind of like a lone wolf because the other brands are not doing very well. Elf Beauty is taking market share and mind share. If you just do a Google Trends and look at their profile, they got a real spike out of the Super Bowl ad. They're reporting phenomenal growth. I mean, steady 70, 80% sales growth, and their earnings growth, was triple digit this last quarter, only 54%, but they're going to earn $3.50 next year with, there's no telling where this company can go. I mean, it's a small market cap, 10 billion, and they just entered into Italy, Douglas, and the CEO said I watched their presentation yesterday, and he said they're going to nurture each customer. So hold their hands as they expand into Europe. They're not in China yet. Their products are made in China, some of them, but they're taking mind share, market share, and they're expanding into new regions with new products. That's a CanSlim winner all the way. Elf Beauty is just, the chart's a thing of beauty. Thank you very much, Mr. Elf. All right, let's go to Uber. This is a stock that I've never owned. I like it. I like it a lot, but I just have never bought it. It was up 10% 2 weeks ago, and last week gave back pretty much nothing, 0.27%. That was a weekly chart. The daily chart is a little extended here above the 10. So maybe it'll form a flat base pattern, go sideways around 80 there. but Uber is definitely delivering the goods on earnings. So we'll see what they have to say going forward, but definitely a strong stock, Uber Technologies. Vert, they have a 3 weeks type pattern as well. They reported earnings last week, and I was a little disappointed. It's gone 32, 24, 18, 13% sales growth. They need to bolster that. You can look at their investor day from November. It's like a 5-hour presentation. It's very impressive. They should ramp, longer term, but the last that sales growth is a little tepid. I think they need to pick it up. It was pretty much flat last week, pulled back to its 10-week line. I believe that was following the earnings report. There you can see the difference between the 10-week line and the 50 simple moving average. But anyway, Vert, maybe to form a flat base pattern right there around 60, 64, somewhere in there. I like the stock, but I just want them to ramp sales. This is a Netflix ramped after earnings and forming a flat base pattern. If you look at the week, it looks like a short stroke here as it gained, 18%. The next week gave back 1%, but it really hasn't, it pulled back for 2 weeks and then ramped up 4%, then gave back nothing last week. It's pretty much flat on the week. Probably trending higher over time, but just doing it on its own terms. Finding support at the 10 there. So it's on a long board. It hasn't hit the short board yet. It's starting to surf. Deckers, this is a monster stock for many years. I just like looking at the monthly chart. Thank you very much. $1 to $880. Just a monster of a stock. They have the Uggs and Hoka brands. You can see it ramped on earnings and just trading sideways. Looks like it's forming a flat base pattern right here. Support at the 10, just surfing beautifully in the sun and the California beaches, surfing without a wetsuit and enjoying the ride. Amazon, they're going into the Dow Jones, big deal. Ramped on earnings, forming a flat base pattern, finding support at moving averages, slightly extended there. Nearly 5% above the 21, but you can see right here, needs a couple more weeks here for that flat base pattern. Now, is Amazon, Microsoft, pretty similar pattern here. These two I like. I put them on because of their, the cloud services and their AI components. And they're just, mega cap, tech stocks that are going to do well. I mean, they're not going to hit a grand slam with these, but they're going to appreciate over time. Palantir is another one, kind of a large cap stock. Not really one of my favorites due to, the greedy management with all their shares, but, you can see the base on base pattern ramped after earnings and just pulled back slightly. Not a lot of cash flow, return on equity, but they have no debt. I don't know. I'm lukewarm to Palantir, but it is a leading stock for sure. And, finding support at moving averages. So it's doing nothing wrong. And the last one, Wingstop, have to have a retail restaurant stock in there. You can see this one has joined the surf club as well, just surfing its moving averages. They're pulling back to the 21 there on the daily chart. On the weekly, you can see that it broke out of this base, nice cup-shaped pattern, and is just ramping higher. It was up 6% last week. Thank you very much. Very strong stock, 2.7, up down volume. So people are clamoring to buy a Wingstop. Anyway, that's it for me. Yeah, that's it for me. I'm not going to honor Steve Jobs today and say one more thing, am I? I probably should. I can't break tradition. So I do have to say, even though that the indexes are extended, I am going to go to the NASDAQ. The Dow and the S&P have hit new highs and the NASDAQ has not. So in honor of the great Steve Jobs, we're going to say one more thing, and the NASDAQ has to get over that 16,212 area, and I think it will. That's the weekly chart. Here's the daily. It made a new high above this high of 16,080, which was made on February 12th. It pulled back to the 21. And then on Friday, made another high of 16,134. So it's inching higher, step by step, inch by inch, but it needs to get over the 16,212 and make a new high. And then maybe that'll lure some more investors in off the sidelines, like I know NVIDIA did on Wednesday. People are starting to believe this AI thing is not just a gimmick or a hoax. This is a real phenomenon, and this is the theme for the new bull market, which I believe started in May of 2023 after the breakout. It was a breakout and pullback in May of 2023. And then, yeah, we had the three legs down here. Here's your breakout, boom, of the long base, and then we had these three legs down, and then it's been ramping since October and just finding support at the moving average, which should sound familiar by now. We're in a power trend. I am bullish longer term, not so much short term. I think we need to chop around, or we will chop around a little bit, but I don't make predictions. I just observe, and I'm observing some choppy action here in the last few weeks of February. So, we just take it one day at a time. I'm bullish. I think the chart shows you to be bullish. Many leading stocks are extended, as I showed. And there are still some to play, though, still some that are actionable. Anyway, that's it for me. Except for I lied one more time. I have to go to the biotech stocks. This is IOVA. They got approved for a cancer drug, ramped on Tuesday after we came back from the 3-day holiday. This is my 3-day rule. When you have a little bit of a short squeeze in an uptrending market, you usually get 3 days of a good squeeze, and then it pulls back, which it did on Friday, 1%. You can see this on the weekly IOVA. Very nice breakout here for this. Get a drug approval for a cancer drug. That's a big deal. So that one looks good. And the other one is Viking. See, I tell you not to gamble into earnings, and I gamble with these biotech stocks with no earnings or sales or anything. But this one broke out earlier, and it's romping higher. This is a weight loss drug compound. They're going to have 2 readouts in the first quarter here. So buckle up, Buttercup, because it's either going to go way higher or way lower, depending on the data. Anyway, that's it for me this time for sure. Have a great weekend. See you Monday at mcstockcharts.com. We never give up. Thank you for watching.